plc, listed on the London Stock Exchange under the ticker FRS and on the OTC market as FNLF, is a Mexico-based holding company primarily engaged in the exploration, development, and production of non-ferrous minerals, with a focus on silver and gold. The company operates through 7 distinct segments: Fresnillo, Saucedo, Ciénaga, Herradura, Noche Buena, San Julián, and Juanicipio. Each segment contributes uniquely to the company's portfolio, which spans underground and open-pit mining operations across Mexico. The Fresnillo and Saucedo segments, located in Zacatecas, are underground silver mines, with Fresnillo being one of the world's oldest and most productive silver mines. Saucedo complements this with modern infrastructure and high silver and gold output. The Ciénaga segment, including the San Ramon satellite mine in Durango, focuses on underground gold mining. Herradura and Noche Buena, both in Sonora, are surface gold mines, while San Julián, straddling Chihuahua and Durango, and Juanicipio and Zacatecas, produce both silver and gold. The company also explores lead and zinc concentrates, diversifying its revenue streams. Fresnillo's mining concessions cover approximately 2.1 million hectares, providing a robust foundation for exploration and development. Additionally, the company leases mining equipment, produces gold and silver door bars, and offers administrative services, enhancing operational efficiency. Positive aspects of Fresnillo's stock are evident in its financial and operational performance. As of May 2025, the share price has exhibited significant momentum, reaching a 52-week high of 1,059.42 pence on April 15, 2025, reflecting an 81.01% increase over the period. Over the past year, the stock has outperformed the FTSE All-Share Index by 70%, with a 74.79% price increase. This upward trend is supported by a rising trend channel in technical analyses, indicating sustained investor confidence and buy interest. The stock's smart score of 8 on TypeRanks, derived from analyst recommendations, crowd wisdom, and hedge fund activity, suggests it is undervalued, with a consensus price target of 1,016.97 pence, 3.51% above the recent closing price of 982.50 pence. Financially, Fresnillo reported a robust net cash position of $458.3 million in 2024, enabling a record shareholder distribution of $547.5 million, including a final ordinary dividend, a special dividend, and an interim dividend. The company's commitment to sustainability is noteworthy, with a 2024 economic impact of $2,152.5 million through wages, taxes, and supplier payments, alongside efforts to reduce its total recordable injury frequency rate to align with International Council on Mining and Metals standards by 2026. Fresnillo's diversified portfolio across silver, gold, lead, and zinc mitigates commodity-specific risks, while its 2.1 million hectares of concessions provide long-term growth potential through exploration projects like Centauro Deep, Arecibo, and Las Casas Rosario. However, several negative aspects warrant scrutiny. The company's latest earnings report on March 4, 2025, revealed an earnings per share of $0.32, missing the consensus estimate of $0.435 by $0.115, which could signal operational or cost-related challenges. Despite a 5.895% stock price increase post-earnings, this miss may raise concerns about forecasting accuracy or market expectations. Fresnillo's stock exhibits high volatility, with a standard deviation of 2.7 and a coefficient of variation of 3,861.5 over a 90-day horizon, significantly higher than the Dow Jones Industrial's volatility of 0.82. This volatility reflects erratic price movements, posing risks for risk-averse investors. The stock's price-to-earnings ratio of 12.96, while reasonable, suggests limited room for valuation expansion compared to high-growth sectors. Operationally, the company faces challenges from declining silver yields in primary mines as global high-grade silver deposits dwindle, potentially impacting long-term production efficiency. External factors, such as government regulations or environmental compliance costs in Mexico, could further pressure margins, especially given the capital-intensive nature of mining. The company's projected capital expenditure of $530 million for 2025, primarily for mining works and sustaining projects like the Jarillas shaft at Saucedo, may strain cash flows if commodity prices weaken. Moreover, the absence of hedge fund ownership, as noted by TypeRanks, could indicate limited institutional confidence in the stock's near-term upside. Key financial figures provide a quantitative foundation for this analysis. Fresnillo's market capitalization stands at £7.24 billion, with 736,893,550 shares outstanding. The trailing 12-month dividend yield is 2.36%, based on a total dividend of $0.31 per share, with the next dividend payment scheduled for May 30, 2025. The consensus earnings per share forecast for the next financial year is $1.02, indicating expected growth from the 2024 reported figure. The stock's 200-day moving average is 44.57% below the current price, reinforcing its bullish momentum. On the operational side, Fresnillo's 7 mines and 4 advanced exploration prospects underscore its scale, while its 2024 economic value distributed of $2,152.5 million highlights its socioeconomic impact. The motivations of Fresnillo's auditor, typically a firm like Deloitte or PwC, are critical to understanding the reliability of its financial reporting. Auditors are tasked with ensuring the accuracy of financial statements, assessing internal controls, and verifying compliance with international financial reporting standards. Their primary motivation is to provide an independent opinion on whether Fresnillo's financials present a true and fair view, protecting shareholders and stakeholders from misrepresentation. Auditors may scrutinize revenue recognition from door-bar sales, impairment risks on mining assets, and provisions for environmental liabilities, given the sector's regulatory exposure. A key question arises: are auditors adequately addressing the risks of commodity price fluctuations in their valuation models? Another concern is whether the auditor has evaluated the sustainability of Fresnillo's dividend policy, given the significant 2024 payout. The auditor's focus on these areas ensures transparency but may also highlight vulnerabilities, such as over-optimistic reserve estimates or under-provisioning for closure costs. Recent reports, including Fresnillo's 2024 annual report and a March 4, 2025, press release, emphasize its financial resilience and strategic priorities. The annual report details a positive economic impact and a strong net cash position, while the press release announces board committee changes, with Rosa Vasquez joining the audit committee and Georgina Kessel the remuneration committee, signaling governance enhancements. Technical analyses from Investec indicate a rising trend channel with no immediate resistance, though a potential correction is noted near the 780 pence resistance level. These reports collectively suggest a company balancing growth, sustainability, and shareholder returns, yet facing operational and market risks. Several questions emerge for investors. How sustainable is Fresnillo's dividend policy in the face of volatile commodity prices? Can the company maintain its production efficiency as high-grade silver deposits decline? What impact might regulatory changes in Mexico have on operational costs? These uncertainties underscore the need for cautious optimism. In conclusion, Fresnillo plc presents a compelling investment case within the precious metals sector, driven by strong financial performance, diversified operations, and a favorable technical outlook. However, its high volatility, recent earnings miss, and long-term production challenges necessitate careful consideration. Investors must weigh these factors against the company's strategic initiatives and market positioning to make informed decisions. Thank you for your attention. If you found this analysis insightful, please like, subscribe, and share to support further content. Let's engage in the